So in 2019, we traveled once a month, every month, and we were expecting to do that in 2020 as well. I actually considered being a digital nomad in 2020, which obviously didn't work out. And once we started staying in the Bay Area more, just hanging out with more friends that we knew who were doing startups, and it's like, hey, this is pretty cool. I have some disposable investments. I didn't really know where I want to put it. And startup investing seems interesting. And it seemed a lot more affordable than I thought. And a lot of people come into startup investing thinking that they need to put in like $100,000 or like even $50,000 into deals. But a lot of companies will happily take you if you can add value.
Now, if an investment doesn't do well, what do you like? What's the definition how do you know if it does well or not?
So you can kind of tell by whether, first off, they tell you they're out of money and it's like, hey, do you want to put in more money? And that's always a concern. Secondly, if they don't raise any additional rounds in, let's say, a year, that's generally a big sign because most startups raise with the expectation that they have to raise again in 6 to 18 months.
How many startups have you invested in?
Probably 85-ish.
No
but
way.
A lot of small checks too. Like some of the bigger ones, I just put like a $2,500 check in.
In some of the smaller ones.
Yeah, some of the bigger ones.
Bigger companies that don't want funds.
Yeah, exactly. So like there are some companies that are in like the $100 or $200 million valuation range, and like I know that the upside there is lower, therefore I just put in less money. But I think it's still going to do well. Like I think it can 10x. But
what's the point though of a $2,500 investment?
Well, it's just like investing like pre-IPO, right?
Yeah. So the idea is that you can still 10x to 50x, and if you look at the S&P or like any of these other exchanges, look at how much value is within tech companies compared to everything else. So like if you look at like Facebook, Microsoft, Google, Amazon, and I think Netflix represent 20% of the S&P. So assuming that you are very bullish on tech, why not get into it earlier? And if you look at these hedge funds and these other investment vehicles, they're actually looking more early stage now. So traditionally, they never touched venture capital stuff because that wasn't their business, but they're looking for alpha. They're looking for income and how to make more money. So startups is that next stage to me.
Yeah, but why 2,500? Why not 10K, 15K? Why 2,500?
I think a lot of it is diversification, and with startup investing, you want to diversify. And then sometimes it's just building a relationship with founders. So even if you're not necessarily super duper bullish, but you think they'll do okay, you might still want to invest to have that relationship because you think their next startup is going to be the banger.
Got it. And what do you look for in a startup specifically?
So generally there's like 3 things you want to consider. You want to consider the team, the traction, and then the product. As long as you have 2 of those 3 things, they're pretty good to go. So you want to see if that they have a competitive advantage and can beat out other people.
The problem is that I've seen so many startups that either you've given me or that other people have given me in the network, and I think they're stupid ideas. I hear them and I think that is like an idiot would have to do that. And then a year later, I see that they've 10x'd in value. I'm like, why? How? It doesn't make any sense. There was a startup that me and Kevin both listened through. This I'm not gonna say what it is. It was the equivalent of like a college presentation. I thought it was so bad. And these are just like adults doing this thing. It's a stupid idea. And like 5x. But but here's the thing. You can't really cash out. It's not like it'd be like sell right now. Like you have to see it through completion, you know. But why? It doesn't make sense. If I'm passing on some of these ideas.
So the question though is your background conducive to understanding what the future is, right?
Yes.
A lot of
I don't want to name names, but that was something I was directly involved in.
Okay. No, but I mean, do you think you're the oracle of the future? Like,
Yes.
What?
Is your view set?
You're saying that on record?
Listen, there's this idea. Well, I'll just say it's in real estate. It's a real estate company.
Oh,
Blew
wait.
my mind.
Is this the one you told me about?
No.
Oh.
No, that was another one. But I like that one.
That one was good.
Yeah, that was good. But no, the real estate one, I can't see how this would. I couldn't see it.
Yeah.
Just as someone who's been in the business.
Yeah.
So you're the oracle of real estate in the future.
For that idea, yeah. I think
I mean, to be fair, there was another one that you presented to me that 10x'd.
Which one?
The credit card one. the pay your rent with your credit card.
Did you invest in that?
I did not. Did you? You did, right?
This is for a spot.
Yeah, so that's
so. Well, let me tell you. Let me tell you what happened. It's a lesson to everybody. Okay.
Who did you learn about this from?
What?
Who did you learn about this investment from?
Kevin O'Leary.
And why? And you didn't trust him?
I did.
Oh, all right.
You're speaking as though you know what I'm going to say, but you don't.
I thought you were going to say that you brought him the deal. That's why you were.
No.
Yeah.
Kevin O'Leary introduced me. I'm not going to say it. Kevin O'Leary introduced me to a company that I liked, and they were good. So I put money into this and got it all signed through Angel Invest. And I got an email saying, congratulations, your deposit has been received. All this sorts of great stuff. Fine. They sent me an email, a follow-up to finalize, like they wanted me to sign something. I missed the email. I don't know. They emailed me again a few weeks later. Missed the email. And I get like hundreds of emails a day. So it's like, you know, sometimes I sift through, or sometimes I'll even see something and be like, oh, I need to get to that. And then by the time like just the day has gone by, I forget about it. Then the founder sends me a text, and it was like in the middle. I must have been filming or something. Sometimes I'll open up the text and just like I'll get to it later. I forget about it. And gosh, almost a year later now, got back to me and said, "Hey Graham, like I want to let you know we're raising another round at like $400 million, like some absurd amount." And he asked me if I wanted to get in. I say, well, you know, I just my initial invest, and he always says like it's too bad we weren't able to get you in the first round. And I was like, wait, what? No, and I showed him the email. It's like I submitted it. I'm in there. I signed everything. It's like, no, you missed this one email, and we weren't able to get you through that round. And he's like, we've been trying to, and sure enough, I looked back, and he was telling the truth. Like, sure enough, they said they were trying to reach out. That was on me. But my investment would have gone up like 15 times.
Yep.
Had I had that investment gone through, and it was you know, not like six figures or anything like that, but it was an amount that like just
it's tough.
Yeah. So they wanted to do a make good, and we're still trying to work that out at that value, you know, at the original valuation. If I could do something, add some value there, but still, yeah. But you didn't invest in that.
Yes.
Why?
So I skipped that one because it was something that I did not feel comfortable pushing on my channel. So I think a lot of my investments aren't necessarily only fintech, but it's what do I feel comfortable recommending to a friend? And at that point, from what I heard at least, it didn't seem like it was that thing. And that's why I was like, oh, it probably will do super well. But if either I can't help them, or if I don't feel comfortable recommending it, do I really want to invest in it?
Yeah, was it you that explained to me, by the way, that their valuation is the likelihood that they're going to reach $1 billion? Was that you that told me that?
I probably think I did.
Yeah. Because I was asking Sebby, I said, like, how do they come up with these values? It seems like very arbitrary numbers, like big numbers, like 100 million, 200 million. And it must have been you that explained, if they're raising at $100 million, that means investors think there's a 10% chance that they're going to hit $1 billion. If they're raising at 500 million, there's a 50% chance they're going to hit $1 billion. Kind of makes sense. That's kind of the metric now in terms of...
And the valuations have actually shifted more. I would say the starting valuations went from something like maybe 5 mil to 8 mil to 15 to like 30 mil is pretty standard now for even pre-product. Yeah. So it just depends on your team and everything.
Are you worried about that? Because the credit card, I think that was a $15 to $30 million valuation without a product. Imagine this, Jack. Imagine not even having a product, and your company's worth $30 million.